Oh, I see. So, what's it doing? Something definitely weird happened to the YouTube. Maybe that's the source of the problem. Who knows? Anyway, nope, this has come through to you A-okay. And yeah, happy days. Um, it is Wednesday, so happy Wednesday. And what day of the month is, I don't know. It's like the 19th or something like that, or the 20th of November, whenever it is. Um, 2024, and we've got, oh, look at that, cute animal. We've got the Bitcoin update for you. Big Bitcoin update for you, actually. What is the big Bitcoin update? I'll make it fast and quick, and I'll get on to other things. The big Bitcoin update is that all the people who were FOMOing in, thinking, oh, Bitcoin's going to go up to 100K, and they took positions at 90 or 91K, over levered them, means over leveraged them, and then got wrecked when it fell, what, 1%, 2%. That's because you don't know how to read what's going on with the VEPs, and you're not able to make the right decisions. If you did make the right decisions, this wouldn't be happening to you, right? You'd be sitting pretty on some nice gains. Just because you see a bunch of YouTube Jimmies telling you Bitcoin's going to 100K, doesn't mean it's going up to 100K. And certainly not right away. Is it probable to get there at some point? Yeah, sure, it's probable to get there at some point. Does it mean it's going to get there right away? It doesn't have to. It could take a while. It could take, days, weeks, months, or years. We don't know. We do know, but we don't know. Like, we have a good idea of when it's probably going to happen, right? Just like we had a very good idea when it was likely to get to the 93 carry area, well, specifically to the RMLR. Because again, we don't care about the price when we trade. We really don't care about the price, right? Let's say you're out of Bitcoin. You don't have any Bitcoin right now. Oh no, you don't have any Bitcoin right now. Boo-hoo. And tomorrow you decide, you know what, I'm going to buy some Bitcoin. And you buy whatever, even like 1% of a Bitcoin. Okay? Right? You know what that means? That means you can trade it, right? You can long it, you can short it. And when you see people making comments, well, oh, you can't short on margin. No, you can if you're trading on an exchange that lets you short your Bitcoins, right? Yeah, you might not be able to short future options, but actually you can if you have the right trading. But what you can do, right, is you can short on an exchange, right? You can short your position. It's just selling, right? You're just selling your position. That's all it is. Shorting is selling. Longing is buying. It's kind of easy, right? Of course, when you're trading options, there's calls, puts, and a million other things you got to know. And if anybody tells you they're a master of options trading, I can tell you, there's no. I mean, there are people who are quite good at it, who know the ins and outs extremely well of not just the terminology, but how to use the different strategies, how to create them, and all this kind of stuff. It is quite complicated. And the reason it's complicated is to help you minimize your risk, which is the entire purpose of options trading, right? Yes, you minimize your reward. You cap your reward when you trade options, but you also cap your risk. Okay, and that is very important, especially if you are new to trading, which is why a lot of new traders start actually by trading options. The problem is that they don't actually learn everything that they need to learn about trading options. So there's risks and rewards in both, whether you trade options, whether you trade, futures, whatever you trade. There's whether you're trading the asset on spot or with margin, whether you're trading perpetuals or inverse perpetuals, whatever you trade, there's always going to be risk. Right? It's inherent in the nature of the trade. The bigger the risk, the bigger the reward potential. The bigger the risk, the bigger the loss potential. Right? It's always that way. No risk, no reward. Want to play it safe? Don't trade. Right? But at the same time, you can reduce your risk. Right? And how do you reduce your risk? You reduce your risk by knowing what the leading information says, as opposed to caring about the lagging information, which is what most people do, because they don't know about the leading information. They don't even know it exists. They don't even know what it is, let alone actually access it, let alone actually how to learn how to use it, right? We give away the leading information for free at Alpha Trading. We literally give it away for free. We give away the education, we give away the indicators, everything you need to learn about it. Yes, we have an advanced package for people who are serious about learning. We have private tutorials, sessions, and we also have just our Pro Trader subscription. You don't need to be tutored for that if you want to learn how to use it yourself. But for people who do want to learn how to be tutored, who do want to learn and be tutored as they learn with one-on-one tutoring, we do have that available. So what you do is, if you want to get the free information or the non-free, you just go to the Alpha Trading Discord at alphatradinghq.com/Discord. Again, that's alphatradinghq.com/Discord. And you just open up a ticket in the request support channel and you ask for your free volatility starter kit. That'll get you the free tools. And if you want the paid tools, you can also just say it in the ticket. If you want the tutoring, you can also just say it in the ticket. You can have a look in the Shop Alpha channel, which will show you all the deals we have going on for the Pro subscription, the Pro Trader subscription of all the Pro indicators, the paid Pro indicators, and also for the tutorial one-on-one session, which, by the way, includes a full year of the Pro Traders subscription. So that's a massively huge. I mean, you're basically getting, it's almost like a 2-for-1 deal, because the price you're paying for the tutorials, and it includes a year of the Pro Trader subscription at the discounted rate, the holiday discounted rate, you're saving an enormous amount of money. It's basically like free money, as they say, right? It's very, very cheap. The reason we do that is because, honestly, we really just want people to learn how to trade better. And so we make it available, for people who actually want to learn. People who don't want to learn, they're not going to spend the penny, and that's fine. We don't expect them to, and we're never going to pressure them. But people who actually want the best tools available, those are available. And people who actually want private tutoring, again, that's also available for the ones who are serious about that, because, well, if you're going to do private tutoring, it's obviously an indication that you're taking this more seriously, and you want to ramp up your trading credentials, so to speak, your trading record. You want to ramp up your trading ticket to the next level. And by all means, when you do this kind of thing, that is exactly what happens. And why do I say that with confidence? I say that with confidence because if you simply look statistically at markets, right, and probabilistically at markets, and you realize certain fundamental facts about those markets, right? Markets are random, assets are usually random, and moving along on a random walk. The only time they're not doing that is when they are in a trending move. We can tell when they're in a trending move or a random walk, thanks to our entropy indicators, which show us that very clearly, right? And the direction of the assets can be predicted, so to speak, with extremely high accuracy with tools like the volatility indicators and the returns oscillators, for example. as well as the entropy indicators, by the way. Also, we can tell when an asset is in distribution or in mean reversion. We can tell that very easily with things like the power mean ribbons and the RMLR specifically, as well as the projection bosses. So we can tell when an asset is very likely distributing away from a mean on a given time frame, or mean reverting to the mean on the given time frame. And you do that for any asset on any time frame. Why is this all useful? Well, it's useful because it lets us know whether or not we should be longing or shorting or staying out of the trade or staying in the trade, right? It's very useful for targeting. It's very useful to not be greedy and to take profits early and often. It's very useful to know how to limit your loss. And it's very useful to not be emotionally attached to your trades, because that is the number one thing that will destroy your trading, is being emotionally attached to your trades. If you don't know how to limit your loss, and if you don't know how to not be emotionally attached to your trades, you're going to have a real hard time taking profits early and often, right? And not taking profits early and often is the number one thing that leads people to losing money. If you're consistently focused on taking profits early and often, again, it doesn't matter what the price is of the asset, right? Again, what do you care if Bitcoin is at $10 or $100,000? All you care about is the percentage gains, right? What do you care if Solana is at $100, $50, $300, $250? What does it matter? It matters not. It matters not. What matters is that you have a trading stack that you can trade that asset without having to use leverage. You can even trade Bitcoin, for example. You can trade a percent of a Bitcoin without leverage, make enough trades in a day, on a regular day when it just moves like 1 or 2% without trading leverage, and you can rack up enough points, right? Enough dollars in profits. You don't need leverage. If an asset is constantly moving back and forth between 1% range, top to bottom, on a given day, at least 5 days a week, you could do very well. And guess what? Bitcoin trades 24/7. So it's always open. You can trade it whenever you want. And it is usually having much wider ranges, if you will, even if it's on a trending day, not a ranging day. Right? It's usually moving more than 1% top to bottom on any given day. Now, there are plenty of days when it doesn't, but it stays pretty tight. But you know what? Even on days when it's moving only like a quarter point top to bottom, back and forth, even on those days, you can still rack up a nice amount of trading wins. It all depends on your trading position, and your position size matters, right? And it depends on the info you have and the speed you have, right? If you are able to manage your risk properly, that's the number one thing before anything else, before even the VEPs, right? If you're able to manage your risk properly, it means don't put more on the table than you can actually afford to lose. Never lose more than you can actually afford to lose, ever. So don't put it on the table in the first place. Don't randomly switch up your positions mid-trade, which too many people do, by adding more leverage, right? Or trying to change their position. Don't do that. If you want to change your position, close your trade, recalculate your risk, see if there's a reason for it, see if it actually falls within your strategy of a well thought out managed risk. And if it does, then you can make adjustments. But don't change strategy mid-trade. That is a recipe for disaster. Okay? I've seen it happen too many times to way too many people. Oh, I'll just lever up extra here. Next thing you know, the asset goes the wrong way for a tick and they're out. It's just not a good idea. You know, don't use 20x, 30x, 40x leverage. It's insane. it will get you wrecked. Okay? Don't do it. It's my handy pro tip. Don't over-lever yourself. Don't put yourself in positions where you're going to likely lose everything. You don't want to do that. You don't want to get that liquidation letter from the exchange, unless you have a particular purpose to lose money on purpose. And I know there are people who have that privileged position in the world, but for 99.9999999% of the people, that is not a thing anybody wants to do. So unless you're one of those 1 in a billion type of people who have a randomly weird job to lose money on an asset in trades, or just have a particular fetish or whatever desire to do something, you have the money to burn and you don't care and it's not going to harm your lifestyle in any way whatsoever, then your objective is actually to make money, not to lose it. And the number one way to make money is to take profits early and often, and to limit your loss, and do not be emotionally attached to your trades. Okay, that's going to do it for now, folks. Talk to you later. Ciao.